Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling and thanks for joining us today on Market Journal. Hey, it is our last show of August. It is going to be fall before you know it, and we are beginning today's broadcast by talking about what's happening in the markets. And according to the latest crop progress report, Nebraska corn rated 67% good to excellent with 1% of the crop mature. Soybeans rated 69% good to excellent with 93% setting pods. Tredas' Doug Simon joined me this week to discuss what's moving the markets and offer advice heading into harvest. I began by asking what he's seeing in fields as he travels around the state.
Crops kind of drying down here lately. We've had a lot of heat, a lot of dry weather. Things were rated pretty highly in the eastern corn belt earlier, and they've not been getting rainfall, and so their conditions dropped, and a little bit below what the trade expected as well. So. And then there's just, the Pro Farmer Tour was out with their numbers, and they came in a little bit higher than what USDA was seeing. And Nebraska went through and looked at some pretty good dryland crops, so Nebraska yield came in pretty good. And so I think that was, one of the things with the Pro Farmer Tour is how is that going to turn out. But when they went through like 7 states, they were like, their weighted average was up in the 184s, but then they always go back and they adjust it after they get together on Friday. And in 2018, I think they were up in that 184, and they went and came down to 177 on their final report, and that's what they did on Friday. They came down from a 184 kind of weighted average across those 7 states, came down to 177, which is still higher than USDA by a couple bushels. And their bean yield was, 1, maybe 1 plus, a little bit bigger than the USDA number. So those numbers also hit the market pretty hard last week.
Yeah, and we're also in that time of year, maybe farmers need to get that post-harvest grain marketing plan together. So what are some questions we should be asking ourselves when we're developing that strategy?
That's a good question. When the crops are drying down pretty quick, and the question is there's an old crop basis, there's an inverse where actually beans were $1 over and they've come down to 30 under, which is what they're posting for their new crop basis levels, which when you look back at history, that's a real typical number at ADM Lincoln. The last 3-4 years, we've had some really wide basis levels with the trade war going on, but that I thought we'd have a firmer basis going into harvest. But there's still, when you look at that versus history, that's still a good number. Then you're going to contrast that to corn, where we've got 80 to $1 over basis for old crop, and that we're going to bridge that gap where we go to maybe 10 to 20 under for harvest, and you're going to have to look at it and say, okay, how much basis appreciation I have post-harvest in corn and beans. Like right now, there's about a 7-cent carry in the corn futures market, but there's only about 5 cents in the bean, which isn't relatively enough relative to the corn. So people will be looking at storing corn and trying to figure out, okay, is there a wet corn program that I can take advantage of? And I guess we're going to talk about China buying beans.
That's my next question.
That's your next question, but they've been buying beans the last, there was about 11 days in a row that they bought beans, and then there's 2 days this week. Mexico bought beans, so if we need to start shipping those beans out, maybe those rail bids will start bumping up, and maybe our bean basis will jump up. If we've got 150 million carryover on beans, it's going to be tight, and the corn carriers are going to be tight. So I think there's going to be a lot of aggressive bidding between rail loaders, ethanol plants, soybean crushers, feedlots, for our corn and beans this year. So I have another positive, outlook here for basis.
As you mentioned, China buying soybeans left and right. So is corn,
Correct.
Is it going to be far behind? What do you think?
That's a big question. USDA had the, number last week in the WASDE report at 26 million metric tons, and that's what they had for last year, and that's what they're projecting for this year. You look at somebody like an ag resource, they're saying 29 million metric tons. That's about a 3 million metric ton difference, which is about 120 million bushels. So USDA's carryouts in the last report were about 1.2 billion. Some of the commercials are using about 1 billion bushel carryover, and that's kind of that. Depends on if China buys the beans. There's rumors that there's resting orders underneath the market lows that we had earlier this week that China would start buying them. Hopefully we'll start seeing China kind of step up, because it's been a quiet export docket lately, for old crop, going from basically that May onward. They were bought a lot and then they were shipping a lot, and it's been pretty quiet the last 2 months. So hopefully that's going to pick up, and a lot of our export demand is going to be based on China again, because they were 7 million metric tons 2 years ago. So they've had and those are all exports for China. So they'll buy corn from Brazil, U.S., Ukraine. But guess what? Brazil had such a poor crop, they don't have that much to export. So I think we'll be in a good position there to export corn to them.
Is there anything else internationally that you're keeping an eye on that could impact U.S. markets?
Right now we're in a market where, like, if you look at the U.S. stocks of corn, beans, and wheat, they're all tight. They're as tight as what they were back in 2012. If you look at the world numbers, they're a little more robust. But if you look at those actual exporters of corn, beans, and wheat, which the U.S. is, of corn and beans definitely, we're definitely a wheat exporter as well. But those stocks are actually as tight as what they were back in 2012. So the overall supplies on the world market's keeping a little bit of a cap on it. But when you have those exporters being tight, that's the residual supplies that are available. So there's going to be demand, that it's going to be competitive between the buyers that are out there. So I think that's encouraging. So.
And you mentioned wheat, and when we were exchanging emails before prepping for this interview, you mentioned how wheat's kind of has some interesting things going on with it, whether it's basis, whether it's stock to use, whether it's how the higher dollar is impacting wheat. What do you think about all that?
Yeah, the last time, what was it, probably 13 years ago when corn and beans and wheat, we had a big run up in prices. The price of wheat was tight then too, and it was pretty steep premium to corn. This year, during the summer, we got corn and wheat on par with each other, and basically a lot of feedlots out west ended up buying a lot of wheat, and that corn got sold back into the market instead of feeding corn, and really collapsed their old crop corn basis. So we've actually fed more wheat this year. That wheat goes into ration. It's usually going to stay there for 3-4 months, but now it's moved up where wheat's up in the $7 and the basis is 80 cents. You're looking almost $8 wheat, and corn's in the $5.50 with a dollar over basis, $6.50. So the wheat's priced itself out of the ration, but that was a big impact on the corn basis this summer. But there's a lot of that dynamics going on. You got up in the north, you've got North Dakota, South Dakota really dry. Well, you go into Canada, extremely dry up there, and so they're really going to suffer on their wheat production as well. So we've got a tight world wheat market, which is going to it'll add more interest to the corn and soybean markets as well.
For sure. Okay, great info today as always. Any final marketing or risk management advice that you want to leave us with?
Well, we're always trying to look ahead and what's going on in the world, and we're at $5.50 corn on D's corn and $13.30 on the Novi beans. They're really good prices. I think if you have to sell off the combine, you can always look at some option strategies. The volatility's come down considerably from where we were 2 months ago, so keeping some ownership in the options. Whenever you have a fall price that's above what our spring price was, there's a higher probability that we could have higher markets, later in the year. So I think keeping, if you have to sell it, you sell it, and you keep some ownership. It's cheaper than storage.
Next week, we'll be joined by Darren Fessler of Lakefront Futures and Options. Next up, as we inch closer to harvest, there will undoubtedly be producers across the Corn Belt turning to custom operators for assistance in harvesting their crops. The University of Nebraska's Custom Rates publication is a well-known report that provides market rate information on a multitude of custom services across Nebraska. Nebraska Extension Farm and Ranch Management Analyst Glennis McClure stopped by to explain how this report, coupled with UNL's Ag Budget Calculator, can assist you in calculating operation costs and setting harvest rates. Market Journal's Bill Dodd has the story.
Harvest is in sight again, and many people have hit the ground running on arranging custom work for their farms. One of the biggest factors of pricing out custom work for your operation is taking a close look at market rate reports. The University of Nebraska features a widely read biannual custom rate report. Taking a look back at the 2020 report will be valuable to understanding what you may be paying for any custom work. Beyond that, the UNL Ag Budget Calculator will be an extremely helpful tool in determining your costs.
But I always tell folks when they're looking at pricing services that they really need to understand the market, of course, but also understand what their costs are, because they really don't want to be out doing work in harvesting with this expensive equipment that we have these days and not covering their costs. So they really should be penciling out those costs. And one of the new tools that we have as part of our Center for Ag Profitability now is the Ag Budget Calculator. And so that calculator will help folks determine their enterprise costs, so cost of production on all of their crops and so on. But within that, we've got a great way to understand their machine and equipment costs and their operation costs. So that's going to be a great tool for folks to use.
One key element of calculating custom rates when utilizing the Ag Budget Calculator is determining field production costs as it pertains to enterprise cost of production.
Operation costs include, several factors and important things to consider. Of course, labor is being one. So if you need to account for your time and what you want to receive as a labor rate, or let's say you're paying someone, so obviously you've got to cover those costs. Of course, fuel is important. Repairs, we look at depreciation costs and also opportunity costs, because you've got a huge investment. In the case of a combine, you've got a big investment in that. And so if I weren't investing my funds into purchasing a combine and the headers that come along with it, what could I invest my money in otherwise? So that's really what opportunity cost is. And of course, depreciation is a big factor as well, because over time you really need to cover those fixed costs. So in the short run, as economists, we can, you might be able to charge less, but then over the long run, that's not a good idea. You really need to be covering all of your costs.
While the Ag Budget Calculator is still undergoing development, it is available for use. If you're familiar with UNL's crop enterprise budgets, you may be pleasantly surprised to find some new features that help the Ag Budget Calculator go above and beyond previous crop enterprise budgets.
So the new Ag Budget Calculator is now ready for folks to use. It's still under development, but right now that Ag Budget Calculator will do everything that our crop enterprise budgets have done in the past, plus more. So we've already added some features in addition to what we've done in the past, including revenue. And we've got a risk module built into the Ag Budget Calculator now, and also some break-even figures. We're working on the whole farm component so that folks can enter information for their costs of operations, their input costs, their materials and services, and then again, their overhead costs. So we've always just plugged in sort of a standard number in our budgets, but we really think that the Ag Budget Calculator will help folks, again, understand more precisely what their operation costs are, and also they can divide out their overhead costs over their different enterprises. So we're really excited about the possibilities that the Ag Budget Calculator brings.
When utilizing the Ag Budget Calculator, it is paramount to consider all factors in play, from coverage rates to equipment depreciation.
The Ag Budget Calculator and, I guess any program that you're using to determine your cost of operations, you want to take in consideration sort of the size factor of your machinery. So again, what's the coverage rate? So how many acres does your machine go over, per hour? Of course, as I mentioned, to determine depreciation, we need to know sort of the age of the equipment and how long you're going to own it. And also, what your purchase cost was. We use the American Society of Agricultural and Biological Engineers formulas, so the ASABE formulas in the background. So we need to have the purchase cost of the equipment and also a list price. So it's, I think if folks had their depreciation schedule handy, they could plug in most of those numbers right into the ABC program and determine what their costs are, for different machinery that they have.
If you own and operate your own equipment, understanding field operation costs to produce and harvest your crops is paramount in making sound fiscal management decisions. Utilizing the Ag Budget Calculator can make calculating and summarizing machine input costs as easy as ABC. Reporting for Market Journal, I'm Bill Dodd.
Thanks, Bill. Glennis tells us she's excited for producers to try this program and to get feedback from them. If you have any questions on using the Ag Budget Calculator, Nebraska Extension will be offering training sessions throughout the year. We've got a link where you can learn more on the Market Journal website. Moving on now, and you may recall back in March we spoke with University of Nebraska ag economist Jim Jansen about the preliminary findings of the annual farm real estate report. Well, now the final numbers are out and provide additional details on land values and cash rental rates. Ag land in Nebraska increased 6% in value compared to last year, with an average price of almost $2,900 an acre. Jim says a couple factors are contributing to that.
We're seeing that the real estate market's looking a lot different than it did a year ago. The expectations for primarily commodity prices are much better than they were a year ago at this time, as well as there's been a fair amount of different forms of disaster assistance. Those two factors have definitely been capitalized into the value, so meaning an increase in the value on average of farmland across Nebraska. And with that, we're also seeing very steady to slightly higher cash rents. Moving forward to 2022, we probably anticipate that the prices for many of our commodities, corn, soybeans, wheat, whatever it might be, is probably going to be intertwined with what we expect to happen to cash rents. Now that's all on the crop side. On the beef side, it's a little bit different of a story. Obviously, if you're in the feeding industry, the prices of feedstuffs, corn, soybean meal, whatever it might be, are much higher than they were. And we also look forward to changes in commodity prices with respect to cattle. Many people are kind of wondering where we're at in the cattle cycle. We have extensive drought in western United States. If we would see higher prices in the calf industry, I think that would maybe help offset some of the higher expenses we see there. But a little bit different deal on that side of the differences of, or that side of the deal when it comes to livestock prices compared to crop prices and how do they impact cash rental rates.
You can see the full report at cap.unl.edu/real estate or on the Market Journal website. Next up, earlier this month, by a vote of 69 to 30, the U.S. Senate passed a $1.2 trillion infrastructure package. It's called the Infrastructure Investment and Jobs Act. Meanwhile, this week, the House voted to approve a separate $3.5 trillion budget resolution. This week, I spoke with UNL Extension Policy Specialist Brad Lubben to learn more about the infrastructure bill, what's in it, and potential impacts on the ag industry.
But it's really been a policy priority of the Biden administration since day one. It was part of the campaign, it was part of the initiative here when Biden came into office, and for the Democratic Congress to push infrastructure as a major new area. We'll see if these two bills have to be married up yet to get to the finish line, or whether we see quite a bit of uncertainty and change yet to come. But that's a bit of the genesis of how we got here.
All right, most definitely. So let's look at a few things in this bill that our ag audience might be interested in. First off, $66 billion for railroads, and that includes passenger and freight. So what are the ag impacts there?
Well, clearly agriculture has interest in infrastructure. And so there's quite a bit of support for various parts of the infrastructure bill, even if there are questions about the overall dollar amount. But investments in rail infrastructure that help with networks, help with efficiencies moving across the country and through the different systems, all of that is potentially contributing to improved efficiencies, reduced transportation costs and constraints, and improved shipping opportunities, particularly for those export market opportunities that agriculture strongly wants.
And $65 billion for broadband. This is an issue that rural areas continue to face.
Right. Clearly, we know of the rural-urban divide on broadband and the importance of broadband access, not just for farm and rural households, but frankly for farm and rural economic activity. The importance of having connectivity in the house, in the field, across the country. Those investments are substantial. Right now it seems as if every package is promising something towards increased broadband rollout of higher speeds, and all of that is helpful. It remains to be seen exactly how it works. It remains to be seen how that couples with existing programs and existing policies, but quite a bit of promise certainly in what we're putting into broadband at the moment.
And then an emphasis on cybersecurity as well, $47 billion. And when I think of cybersecurity, I think back earlier this year, the JBS cyber attack. There was also that Colonial Pipeline ransomware attack. So Seems like cyber attacks continuing to be an issue and definitely doing something to address that.
Right. Well, this is certainly a promise to put investment into cybersecurity. That's simply the world we're living in, that everything is continually at risk of a cyber attack. Anything that it has high priority, anything that is strategic, is a favorite target of cyber hackers and cyber cyber villains. So the fact that there's investment in this, the need is always going to be there. It's important for agriculture and every other sector to be cautious and to be prepared, and this perhaps will help that out.
Have you found that most agricultural groups are in favor of this proposed bill?
You know, I think we see agricultural groups responding to parts of the bill that they certainly are strongly in favor of. The investment in roads and bridges, perhaps the investment in rail and broadband and so forth. All of those are important priorities and have long been priorities for many ag groups that we know of. There is caution and concern about an overall price tag. The $1 trillion plus price tag on this infrastructure bill indicates that it's about $550 billion of new spending, $650 billion perhaps of existing authorities or unspent emergency funds from the COVID relief bills. So substantial new investments or new commitments to spending. That's always a question for any of the fiscal conservatives or fiscal hawks here. But it's not just this package, it's whether this package is in fact a gateway to the even bigger $3.5 trillion infrastructure package. So it's weighing what parts do we like relative to what's the overall bill and is that worth the bite.
That being said, what could be the next steps here?
Well, we're in the midst of some of those steps as we speak. Is all part of a much bigger negotiation about will this hard infrastructure bill move in lockstep with the soft infrastructure bill that's being proposed in the House. There are also huge questions in there, not just about spending priorities and new programs, but also about what they call the pay-fors. What policies will pay for this new spending? And if those pay-fors include new taxes, new user fees, new compliance, et cetera, but new taxes, then we get to raise the issue of or hear the issue of agriculture's concerns about capital gains tax and estate tax and other issues as well. We're a long ways from the finish line. Arguably, we're not even yet to the starting line. We haven't even yet got the resolution in place to say that debate on a full bill is in fact ready to go. So lots to be debated, lots for agriculture and other audiences to watch closely.
Thanks to Brad. This is a story we will continue to follow on Market Journal. Next up, farm safety is not a game, but the University of Nebraska Medical Center College of Nursing and College of Public Health, along with the UNL Computer Science and Engineering Senior Design Team, have come up with a virtual reality game called Rollover Ranch. The game helps to train nursing students for farm accident victims. Sure, playing Rollover Ranch is fun, but the game being used as a training mechanism to help prepare nursing students for farm injuries is even more important. You can learn more about this new farm safety game in the August issue of Nebraska Farmer. And the weather is all fun and games with Al Dutcher. He is next to tell us what's going on in the forecast. Al, this last full week of August has brought some hot temperatures. What can we expect as we round out the month?
Well, Troy, certainly was hot this last couple of weeks. Very little in the way of days where we were below normal in terms of temperatures. Now, it looks like that trend is going to continue at least for the next week to 10 days. We do have a couple cold fronts that are going to move across the northern plains and slightly through Nebraska, but nothing that's going to be long-lived. It has had an impact, the recent moisture, on the drought monitor, and we'll show you the current drought monitor in regards to where the situation currently stands, and this is as of Tuesday, so the latest precipitation from Tuesday on has not been included in this map. So we have seen some heavy precipitation across northern Iowa. We've had some heavier precipitation across northeast Nebraska and additional heavy precipitation across southwest Nebraska. So it's possible those areas that received more than 2 inches in this last week will likely see some improving conditions. But overall, very long-term dryness continues. We'll wait to see whether or not some more additional precipitation events will start to erode much of this area to the north of us. As we look at today's upper air pattern, we have this trough across the northern plains. It's been advertised to push a cold front through the state pretty much for the last week, and it was supposed to occur earlier in the week. It's just been holding off ever so slightly. We do have a low pressure situated in the southwestern part of the state. There is moisture available along this front, but it's fairly weak as we have a hurricane that's going to be moving up into the Gulf region. Right now anticipated to come into Louisiana, but further north we'll see a zonal flow set up after the passage of this cold air to the east. High pressure will try to build into the region, but as it builds in behind this cold front, we will see some convergence and some precipitation along it. So we might see some isolated heavy precipitation across portions of southeastern and east central Nebraska. By Monday, another trough comes into the Pacific Northwest. That's going to start to build the ridge back up into our region, so the warm air is going to return to the west first, and we'll start to see some of that start moving into the eastern part of the state as we get into Tuesday, but we still may have a little bit of residual leftover convection. By the time we get into Tuesday, we start to see the ridge building in earnestly. That hurricane is now moving up into the lower Mississippi River Valley, and then for our region, we're basically going to be caught between systems, so most of the precipitation is going to stay to the north and to the east of us. We should stay high and dry, and on Wednesday, we expand that ridge even farther into our region, so we're going to be right back up into the low to mid 90s across a good portion of the southern half of the state. Low pressure at the surface is shown to be developing in southeastern South Dakota, may trigger some thunderstorm activity east of the river, but for most of Nebraska, it looks like we're going to stay dry. On Thursday, this trough tries to dig a little bit deeper, but this high pressure system is firmly in control, so we're going to see very warm and sticky weather to the south of us. Low pressure sits up the surface in northeastern Wyoming. We should see some decent precipitation start to break out in the Mott Rockies, and we do have some monsoonal moisture making its way up. Some of that might actually scatter some precipitation across the northern part of the state. By Friday, we start to see this ridge starting to sag toward the south. That trough comes in a little bit farther toward the northern Rockies. Low pressure sits up in northern Kansas, may bring some moisture up. Right now, just showing a scattering of precipitation across the eastern half of the state with a more concentrated moisture to the north and to the east of us. And as we go out further into the future, that high pressure is going to last through the Labor Day weekend at least, and maybe into the following week, probably by Wednesday or Thursday. And then we'll see that cold air push into our region. In terms of precipitation, with that cold air coming in, we have more precipitation chances. So overall, Troy, it looks like we're going to see some hot weather return next week with scattered chances for precipitation.
Thanks, Al. That's going to do it for this week's show. If you missed a story, be sure to download the Market Journal mobile app, or you can follow us on social media to join in on the conversation. Hope to see you right back here next time. I'm Troy Moling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.